semiconductors took a beating earlier this year, but the rebound is now happening. Let's dig into the third quarter results. How was our previous quarter?
In Q3, the fund delivered 3.45% of return in euros after all fees. And this brings the fund's performance on a year-to-date basis into the black with a positive 0.34% return. In euros, in US dollars, which is our other share class, the performance is even better.
But a less than a year return it's nonsense for a long-term investor. If we put this 1 year into the 10-year context and we look at the Sifter Fund's 10-year performance, which is 11.4% annualized return after all the fees, meaning 195% cumulative return, that tells what you can achieve as a long-term quality investor.
Yeah, companies improve year after year, but the share price alone doesn't tell you the whole story.
And if we look at, for example, 2018 and 2022 were negative years. So it always happens that there are negative times, uncertain times where it seems that stock prices don't go anywhere. But it doesn't mean that the companies are bad. It just requires time. That's most important thing for a long-term quality investor.
Time and patience.
Let's look at the best performers in this quarter. We had Alphabet, Lam Research and TSMC. So Alphabet we have owned now over 10 years. But the last 2 years have been quite challenging for the Alphabet business. We know that we have AI threat and then we have this antitrust risk there. So could you elaborate a little bit deeper what has happened in Alphabet business and how AI has threatened Alphabet, or is it?
Well, there has always been a narrative in the last 2 years in the market that these new generation of large language models and these chatbot tools would kind of replace the Google as the default way of finding new information. Like, let me Google this, for example. As we know, Googling hasn't yet gone away. And if you look at kind of key performance indicator, like the number of paid clicks, the growth in paid clicks and the growth in Alphabet's advertising revenue, you still cannot see any notch on the radar. So we are, of course, following this situation, how it develops closely, but as of today, you cannot say that this has disrupted Google's business at all, really.
Okay.
And the strong Q2 reports that came early in this quarter was supportive of that. As for the other big kind of looming cloud on the Alphabet's sky has been this large antitrust case. So it was ruled that Google is a monopoly in search engines. The big question was, what is going to be the court's remedy? And we got that ruling in late August, and it was a slap on the wrist, essentially. So the biggest fear is that they would have to spin off or divest some part of the business, but that didn't happen. So the actual remedy was just to share some more data to competitors and customers, so essentially a nothing burger. So now that this uncertainty is out of the way, that's also very supportive for Google as an investment.
Right. And after the ruling, the share price was kind of like a relieved +6%, +7% gain after that decision. Not a big deal, but still positive. So how do you think about the AI and the other areas in Alphabet's business, for example, cloud business and YouTube?
Well, AI is also supportive for Google in many ways. They are right now the #1 app on the App Store, Gemini, which is of course the main competitor to ChatGPT. They reported 450 million monthly active users. So that's like 1/20 of the world's population, roughly.
That's a lot.
Still only half of ChatGPT, which is around 800, but still a very high number. When it comes to the video part, they are right now having the best image generation models and video generation models. They have a structural competitive advantage in this space because they have YouTube, right? The largest depository of video material that they can use to train their future video generative models. And that's something that's very hard for anyone else to replicate. And when it comes to the cloud, we have been seeing a resurgence in growth in that area as well. It's not just specific to Google. We see the same in Microsoft as well. Customers are training their own models in the Google and Azure cloud, and that rate has increased in the recent quarters, which has been very supportive of this growth.
Right.
Can this go on forever? It's uncertain, depends on the actual return on investment for these kind of new AI models, but at least we know that the volume of data that humans are generating is growing exponentially, and this has to at some point be stored and processed in a cloud somewhere near you.
But in conclusion, we see that the Alphabet has several different revenue sources. It's growing. We still believe that there's a moat around Alphabet business. So in that sense, it's a nice hold, so to say. Perhaps we won't increase the position as we did, by the way, last autumn. A year ago, we compared Alphabet against other tech companies, and we came to the conclusion that Alphabet is undervalued. We increased the position, and it was a good move, and now we've been enjoying this nice share price gain in this year. So maybe that's about the Alphabet now, and let's move on to the Lam Research. So earlier this year, we noticed that all the semiconductors and also tech companies went down around the Liberation Day. But now Lam Research and also the other semi companies, they have rebounded very nicely. In particular, Lam Research, what are the main drivers for this nice share price gain?
Well, there's three things that going on right now. One is that Lam has a high exposure to memory customers that make memory chips, especially NAND chips, which are like long-term storage chips. This kind of business has been in the slumps for like 2 or 3 years by now. But we are now finally seeing strong signals that we are getting more end user demand, that this kind of part of the semiconductor industry is now recovering.
Okay.
The second part that drives a lot of share business growth for Lam today is AI-related high bandwidth memory chips. So these are specifically used now in AI models, in training AI models, and they use the technology called deep ion reactive etch, which is something that Lam Research is very specialized in. And as there's more demand for AI chip, that kind of money also flows to Lam Research through that channel.
Right.
But the most interesting part is Intel, which you might remember.
Surprisingly, yes, Intel again. We used to own it.
Yeah, back in 2019, and then at that point we realized that Intel is no longer the top dog. They are falling behind in terms of technology and market share. So we divested the stake in 19. And since then, well, the business hasn't really improved, but today there's really strong interest from the US government to make Intel a strong US domestic producer of chips. That's a very strategic reason, material in this day and age. And also we've seen that NVIDIA, which is a potential customer of the Intel foundries, they have an interest in making sure that Intel has some kind of production capacity in the future as an alternative to TSMC, which is currently sole supplier.
Right.
And even after the quarter, we got news that AMD, the historical rival of Intel, has also committed to buy some manufacturing services from Intel. So there is basically a strong US interest in keeping Intel foundries alive.
Right.
And to invest more in the future, which is supporting anyone that is making equipment for these future Intel fabs.
Yeah, it's really interesting story. And if we think about this protectionism, so it's kind of like benefiting now the US companies, Intel, but especially these other machine builders, which are also enjoying the demand from the other part of the world, but also increasingly from the US. So it's good for them.
It's good for them, and we can expect more of this to come.
Yeah, interesting move, even though, as we know that earlier in the spring, there was this tariffs threat. And we thought that, okay, now all the decisions, investment decisions will be in ice, that there won't be any investments, but it seems to be the other way around. The third one is the TSMC. Well, as the other companies, we have owned the TSMC already long time. Anything particular in going on there?
No, it's the same usual. Last year, we reduced our stake in TSMC by quite a bit. The reason for that is that, well, since they have most of the manufacturing on the island of Taiwan and there's a lot of tension in that region, that kind of a little bit increases the risk to that investment case. Those risks haven't gone away. So it's still very relevant for us today. But the share price has, of course, been doing quite well as they are also riding this AI investment trend.
Yeah, one could argue that reducing the holding of TSMC in last year, December, was not the correct one. However, it was purely from the risk mitigation point of view. We still own it almost 5% nowadays because the share price gain in this year. Let's move the bottom companies in the third quarter. And we have, unfortunately, again, Novo Nordisk, Deutsche Börse, and then Japanese SMC. Well, Novo Nordisk, it has a profit warning, CEO kick out, and then this compounding pharmacy problem. So could you elaborate a little bit deeper what's going on in Novo and what are the risks?
Right, so these two problems are very closely related. So the big problem is the compounders. So compounded pharmacies in the US can, under specific circumstances, when there's a documented medical need from a patient that cannot be supplied by over-the-counter products like Ozempic, then they can make their own version of the drug without buying it from Novo Nordisk. This is supposed to be used in very small, very local niche cases, but this has blown completely out of proportion with mass companies making fake Ozempic essentially. Right, currently there's over 1 million patients in the US that are taking fake Ozempic, and thus they are not, Novo Nordisk is not being compensated for this. So that's obviously a huge problem for Novo Nordisk at this moment, and that's why they gave the profit warning and fired the old CEO.
Right, and so these 1 million plus subscribers, customers are roughly 1/4 of the total customer base they have.
Around that number, yes.
Yes.
So it's a serious issue.
Right.
But they are taking action against this. First of all, they are taking legal actions against these compounders, but they're very numerous. There's a lot of them, so there's a lot of lawsuits being sent out. Currently 120 or so, and 1,000 cease and desist letters.
Yeah. Any progress in that?
Well, 40 of these lawsuits has been ruled initially to Novo Nordisk favor.
Okay, so it's a positive progress in that sense.
But there's still a long way to go ahead. There has been some action by U.S. lawmakers. So a bipartisan group of 80 congressmen has made a joint letter that has been sent to the FDA. Please do something about this. Right now, this semaglutide raw ingredient is being imported from China, mainly from factories that are not supervised. They're not regulated. They're not approved. This is not supposed to be used for human use because no one really exactly know what it is. But that's what's going on at this moment.
So it's a serious health problem or risk at least for the U.S. consumers in U.S. And think about the situation that if the FDA is not going to take action, so it can threaten the whole pharmaceutical sector.
It takes roughly $1 billion to create a modern drug, including all the trials and the cost of the failed studies. So $1 billion to bring a new drug to market. And imagine if you get a new drug, but then anyone can just copy that and sell it for 10 euros. It's not a sustainable model for the pharmaceutical sector.
Right.
So our view is that this is a very short-term problem. It will has to be resolved at some point. I can't give you a date. It could be months, it could be years, but at some point this problem will be resolved.
So in conclusion, despite of the risks and the things it's going on, we still own and hold the Novo position, and we increased our position a little bit after the share price decline. So we still believe in Novo, right?
Right. Currently the valuation, even if we assume zero growth for Novo Nordisk in the next 10 years, you still get a very attractive valuation. So it's almost like a no-brainer at this point to add to Novo Nordisk. You just need a little bit more positive news from this compounding to kind of make it a good investment. And in addition, there was this concrete evidence from a new study in this quarter that semaglutide, or the active ingredient in Ozempic that Novo Nordisk makes, they have a 26% reduction in cardiovascular risk events. So it is basically heart-healthy drug in that sense, if you will use those words. And this is something that's been found to be only specific to semaglutide by Novo Nordisk. It's not applicable to the wider competing GLP-1 drugs. So that gives semaglutide a specific advantage in that it's more likely that insurance companies will cover this drug for weight loss, given that it has these cardiovascular benefits as well.
Oh, well, that's a positive thing. Good to hear. Let's move to the next bottom performer. That's a stock exchange in Europe. It's Deutsche Börse. Deutsche Börse was one of the best performing companies earlier this year in the first and second quarter, and now it's on the bottom box, so to say. Is Deutsche Börse worse company than it was in the spring, or what happened?
Well, there has been no change to the underlying fundamentals of this business case. In essence, Deutsche Börse had a great quarter at the start of the year because there's a lot of volatility. When there's a lot of volatility, people are hedging more, and Deutsche Börse is essentially taking a cut for every derivatives contract being traded on their exchanges. So that's a positive. In addition, there was a lot of fear that the US can't be trusted anymore in the future as the global reserve currency and as an investable country.
Right.
So there was a lot of new fund flows into Europe, which tend to go through the Deutsche Börse services as well. But as of Q3 of this year, there's been a restored trust in the US, at least for now. And the volatility in the market has also been much lower. So in that sense, the Deutsche Börse share price kind of consolidated back to previous level, or well, above previous levels, but a little bit down.
How do we see the future forecast when it comes to revenue and earnings growth on average next 5 years?
So there's Deutsche Börse has both like cyclical part of business, which is volatility driven, but also an underlying secular business, which is kind of services and subscriptions that are being growing steadily. And that's growing about 8% on average. So we still see positive growth ahead. And there's also additional upside now that there's a European Union initiative to kind of liberate more savings and put those into actual use in the economy. So trying to get those Italian grandmothers to take their savings from under the pillows and put them to use in the financial market.
Well, that's easier said than done, I would say.
Indeed, it's a very long and thorny way to go, but this would be very helpful for the European economy as well to get more capital available for companies.
Yeah, and money circulation.
Yeah.
That's what is required. So the final bottom performer was a Japanese industrial player, SMC. We all know that the industrial production has been very sluggish for the recent 3-4 years now. It's in a bottom cycle. Do we see any positives in regarding SMC?
Well, there are perhaps some positives to expect. I mean, it's a lot driven by the new spending on industrial expansion, essentially. And in these last 2, 3, 4 years, it has been very sluggish. But given that the European Union is investing more, perhaps the kind of tariffs will drive more domestic manufacturing in the US. That could also give a boost to this kind of company. But as a whole, yeah, it's not our strongest investment, I would say, at this moment. And indeed, we might do something about this position in the future.
Right. We didn't sell or buy any new companies. However, we increased and we decreased the positions. So we decreased the positions in Disco, TSMC, Safran, and Lam Research. What are the main reasons for decreasing the current holdings?
Well, 3 out of 4 of these are in one way or another semiconductor companies. And they had a really good outperformance in this quarter for reasons previously listed. And for that reason, these positions become too concentrated in our portfolio. And therefore, we had, for regulatory reasons, we had to sell it. And also to keep the kind of portfolio more balanced. So the main reason for that was mainly technical. For Safran, the main reason was that it's a very big chunk of the portfolio currently. And it has also been getting quite expensive in this year. So we just saw more better valued opportunities elsewhere in the portfolio. It's still our biggest investment, by the way, but we did a little bit of a haircut.
But then we reallocated money from those companies to West Pharmaceutical, Novo Nordisk, Canadian National Railway, and Old Dominion, for example. So why those companies?
Well, Novo Nordisk and West Pharmaceutical Services have a similar story. They both had a trading day this year where the share price came down quite a lot, which was, in our view, a overreaction given that the fundamentals weren't that much worse, but the share price was a lot cheaper. So in these kind of cases, when we get the conclusion that no permanent damage has happened to the underlying business model, we can then reallocate capital to an opportunity which is much more attractively valued. So that explains Novo Nordisk and West Pharmaceutical Services. And when it comes to Old Dominion and Canadian National, they are both kind of servicing transportation services for the industrial sector in the US, which has been kind of sluggish this year as well. But similar story that they are promising much better yield on investment currently than other lines in our portfolio. So we have reallocated some capital there.
Yeah. So 4 times a year we update the situation in each and every company in the portfolio, and based on that conclusion, then we start to reduce and increase the current holdings. That's how it works.
Yeah, the idea is to allocate capital to the opportunity that has the best outlook at any given time.
Right. But the biggest contribution what we as a fund manager can do is to invest in the high quality companies and keep and hold them for a long time. But sometimes we have to do some adjustments in the portfolio.
Yeah, some fine adjustments on top.
Right. Let's move to the next topic, which is the allocation. And we could argue that does it make any sense to have a diversification in the fund? And we think that yes, it does. In this kind of like a world where we have lots of geopolitical tensions and uncertainties regarding regulation and things like that. So it's good to have a geographical and sector allocation in multiple places. So currently, for example, we are exposed in US and North America a bit less than 60%. By the way, it's a bit less than in index and most of the peer funds, they have even 70%. But we think that the 60% is good enough. In Western Europe, we have roughly 30%, which is much more than in the world index, for example. But when it comes to sector allocation, what is the reason why we have so many companies in tech and industrials?
Well, we are generally looking for companies with growth opportunities, predictable revenue models, and strong competitive advantages. And those tend to be clustered in these sectors. Tech companies can innovate and create new products. Industrial companies usually have this kind of upfront sales and service business, which gives this usually between 30 and 40% of revenue is kind of predictable, reoccurring service revenue that gives us better insight and ability to forecast the company's future. And right now also industrial companies are quite attractively valued as well.
Yeah, that's correct. So we are not a global US-based fund, meaning that too much in the US. And on the other hand, we are not tech fund. We have a nice diversification in different sectors, but at the end of the day, what we believe in is the business fundamentals. That's the core of the Sifter investment philosophy.
Yeah, and we don't have any targets for country weights or sector weights. It's indeed the company itself will guide us to the current allocation that we have. It's just an outcome of the process, not an active decision.
Right. So in conclusion, we have now covered the top performers, bottom performers, the portfolio actions, and we will keep following and monitoring the Novo Nordisk, for example. We will follow the Alphabet. But at the end of the day, our main thing, what we do as a portfolio manager, is to monitor that the whole portfolio keeps improving business-wise, and also the valuations remain on a moderate level. That's what we do for our investors. Thank you for watching, and please, just a friendly reminder, all the cases, companies are not a investment advice to sell or buy any securities. These are just for the Sifter Fund examples how we manage this fund. Thank you and have a good autumn.